Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for May 24th, 2020. I hope everybody's having a great weekend. I know for many of you it's a long weekend. Here in the United States we're observing Memorial Day, the holiday, which actually will be on Monday, and I know in the UK there's a spring holiday there. So anyway, if you're not in one of those two places, hopefully you're just going to enjoy the maybe more peaceful markets on Monday. But I hope you guys are having a great weekend. Now, before I get started, I wanted to say if you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days, and it doesn't matter what version you're using, whether you want to do the premium version or you want to do the light version. Make sure you download the mobile app, because the mobile app is for both versions of ForexAnalytix. So it doesn't matter what operating system you're using. Make sure you do that. And as you're trying out ForexAnalytix, you get the premium version during your trial. So give it a whirl. It's only $1. All right, now like I said, it is a holiday week, and in the United States we are observing the Memorial Day weekend, or Memorial Day holiday, excuse me. So we will not be broadcasting our normal F.A.C.E webinars on Monday, or Daily Roundup, or European Crossover, for those of you that are ForexAnalytix subscribers, but we will resume everything on Tuesday. So just want to make sure that everybody is well aware of that. But we wanted to film this week ahead video because there's a lot of things happening next week, and I think that we've got some setups that are worth noting going into next week as well. So let's talk about all the things that did happen, can happen, and some of the important inflection points that I think that we're reaching in the FX market. So let me get rid of the data flash there, and let's talk first and foremost a little bit about the euro dollar and what happened with the euro last week. The euro dollar, as you guys have probably seen, we've been bouncing around this 110 to 108 level. Sub 108, it's like 107.50. We've been bouncing around there for quite some time. I was last week, I actually was thinking, man, maybe the euro could actually break out. But then, as we got into the beginning of last week and we were pushing towards the 110 level, it looked like we were going to fail up there. And if you were watching the F.A.C.E webinars, a couple of us were selling up there, and and so this breakout, this range, I don't know if it's going to break right now, and I don't think that we're going to break to the downside just yet, but I think we might be able to test the downside. And the reason why I say that is, let me take you over to the dollar index. So we had the dollar index, and let's just backtrack a little bit let's go into last week. So last week, here we are, right here. We were developing a wedge, and the dollar index really needed to get above 101. This is pretty much the inverse of the euro, as most of you know. But the dollar index was approaching that 101 level. Okay, failed up there, and then we broke through this trend line and the 50 DMA, and it looked like, hey, we're going to slip back towards support. And then we started to bounce towards the end of the week. Now the thing is if you were looking at the dollar and you were thinking, okay, we're going to break down here, what you got is you got limited follow through. Let me undo this magnet. You got limited follow through. You have the 200-day just below you, and then all of a sudden the dollar starts to reverse. Now, one of the things that could take the dollar higher, in my opinion, is a reversal of risk. Okay, that means the equity markets, as you know, that have just been nudged up against the highs. If they start to pull back a little bit towards 2,800, that's going to strengthen the dollar, in my opinion. Now, one of the reasons why I feel the dollar could continue to rally here is because of the way it is shaping up against other major currencies. So I could take you through the ForexAnalytix analysis, but you guys can go ahead and I'll let you guys take a look at that. For those of you that are subscribers, I'm going to just do a little bit of my own analysis here on these majors, and I want to show you some of these inflection points. So, we have the euro dollar, and by the way, on Wednesday, there is going to be a vote from the EU, I think the 27 countries on, basically the the push that the German Franco relief fund. All right, that's going to be discussed and voted on, like preliminary stages, on Wednesday, and there's going to be a lot of back and forth. And I guess the progress from there is going to really set the pace for the euro after Wednesday. But I would think that the market is disappointed because we're in early stages of trying to figure out the COVID-19 relief for the eurozone, and all parties are trying to agree, and it's just not going to be an easy task. So I think the euro, even for that reason, is at risk of slipping back towards the 108 level. Okay, so the 108 level, is going to be major support. But if you come back through the 108.90 breakout point, which we tested it on Friday, but we break through that, we should slip towards 108. Okay, that's one risk for the dollar to head higher. Then you look at the cable, and the cable has this head and shoulder pattern. We failed at the breakdown point, so you can see right here. We had the breakdown point, we came back, retested it, failed at the 50-day, and we're rolling back over again. So the risk of the cable to push back below 120 and towards 118 is quite high. Then you take the Aussie dollar. The Aussie dollar, we had a false breakout. We had a breakout last week and it failed. So that false breakout should lead us back, in my opinion, probably back below the 64-cent level. Okay, there's another feather in the cap for the dollar index. Then you have the Kiwi bouncing around in a range. Kiwi could probably slip back to below 60 cents towards 59 cents. Not too much of a problem. Now, these two next currencies I think are really important. So you got the dollar Canadian. The dollar Canadian's been holding this wedge, and myself and a lot of the ForexAnalytix traders, we were buying down here towards 139 at the end of last week, and it's popped up, and the wedge resistance comes in at 141. But I want you guys to keep an eye on the US dollar Mexican peso, because the US dollar Mexican peso is in breakdown territory. We broke through the lows in March. We came out of this triangle, and it's been pretty much a nonstop, move lower. However, if the equity markets start to show a little bit of sign of weakness, this weakness in the US dollar or Mexican peso should reverse its course. So whether we get a push all the way to 22, right here, you can see it right here at 22.10, 22.15, whether we get our push all the way back down there, which there's a lot of extensions. It's a 38% retracement longer term, this one right here. Okay, see, it's a 38% retracement right here. I'm sorry, it's actually the 50% retracement. This is the 38% retracement that we just slipped below. This is a 261% extension of this move. There's a lot of confluence right here, plus it's a big breakout point. So if we reach that 22 level, I think that's the level that you want to be on the long side for a counter trend bounce. But more importantly is if risk starts to reverse and we start to see stocks move lower, what you're going to get is you're going to end up getting a false breakdown. So in my opinion, if we don't make it all the way down towards 22, if we start rallying and break back above this downtrend line that you see right here that comes in at, currently it'd be around 23.15, 23.20, depending on, what day, if it turned around and reversed, that would cause, in my opinion, a false breakdown reversal. Okay, so in other words, I'm interested in the US dollar Mexican peso right here or down here. So down at 22, if we can make it down here at 22 and change, or if we could break above this trend line. So again, this is going to be more of a product of risk appetite and risk aversion. And last but not least, if you guys are looking for any clues from the US dollar Japanese yen, I mean, in my opinion, the US dollar Japanese yen is dead money at this moment. It's not going anywhere, and it's really hard to gauge the direction of the yen based on what stocks are doing, because the yen isn't weakening much as stocks move higher. So if stocks move lower, is the yen going to strengthen? I think most of us that follow the yen rather closely, we're all scratching our head trying to figure it out, and really aren't unsure. Oh, one other thing that I should mention as well before I talk about some of the events that are happening this next week. You guys got to keep an eye on gold, because gold, as much as I keep thinking that gold's going to back off, I mean, it's holding up extremely well. Every time we make new highs, I'm like, oh, divergent relative strength. We made a new high. It's going to be a failure. It's probably going to start breaking down. Even though I'm not trading gold, I'm watching it with a very close eye. And the fact that it just doesn't pull back has got to be pretty frustrating if you're trying to get on the short side of gold. So just keep an eye on it, because it's one of those asset classes that, if risk appetite, or excuse me, risk aversion starts to pick up and you start to see stocks come down, you might see gold just rip. You'll notice that from this move lower, we're challenging the 127% extension, right? Okay, and this is, by the way, we are also stalling at a long-term 78% retracement. Let me take you over to gold here, just to the spot prices so you can see this longer-term chart. Okay, so this is a weekly chart. We're really stalling at the 78% retracement, but again, we're just holding on to gains. We're not seeing any type of reversal. So if you take, let me draw this fib, because this is the one that you'll see it, the one I was just pointing out on the ForexAnalytix platform. Okay, give me 1 second. Okay, you can see we're stalling just ahead of that 127% extension. The fact of the matter is, if we break through those highs, we should challenge 1860 relatively quickly. Okay, and I wouldn't want to be stuck on the short side of this as it breaks out. I just want you to observe how strong gold is and has been, and it is not budging to the downside, which, like I said, if you're on the short side, you're extremely frustrated. And there's a lot of gold bears out there. I know you could argue that, there's a lot of bulls, but from a, if you watch sentiment wise, people try to be bearish gold and it just keeps ripping up in their face. So anyway, just wanted to point that out. Now, going into next week, there's a lot of events that are happening this next week. Now, remember, we have a holiday on Monday here in the United States and in the UK, and it should be a fairly slow session on Monday. But that doesn't mean I won't be watching prices as they open up here in the next several hours, probably opening up as you're watching this video. But this next week we have the RBNZ financial stability report, which will be on Wednesday morning in New Zealand, Tuesday night if you're in the US. Like I said, on Wednesday there's going to be all this discussions about the COVID relief in the EU, and there could be some disappointment there. So you got to watch the euro because of that. And then on Thursday, we have durable goods orders, obviously unemployment claims, the market's watching very carefully. And we have preliminary GDP numbers out of the US. I don't know how much that's going to move the market, but, because obviously our data is going to be pretty skewed moving forward. But because it's preliminary, I think we have to pay pretty close attention. On Friday, we have Canadian GDP. And we have personal income, personal spending. So all the inflation data that everybody keeps wondering if there's going to be inflation, but I actually think we're going to get the opposite of that. So but we'll be watching that data on Friday. So there's a lot of economic data that's happening this week that you guys are gonna have to be aware of. But remember, if you haven't tried out ForexAnalytix, make sure you do so. Just give it a whirl. So this way you can be in the chat rooms with myself and the rest of the staff of ForexAnalytix. We're in there every day, just chatting away, and there's 100 plus traders in there. Very very active community, and a lot of those guys and gals I've been chatting with for the last 10 years plus. So you'll really enjoy it there, and If you like this video and you think it's going to be helpful for you this next week, make sure you give us a thumbs up, especially if you're watching us on YouTube, and subscribe to the channel so that this way you don't miss any of the great interviews that Dale Pinkert does throughout the course of the week on his F.A.C.E webinars. And I hope you guys have a great extended weekend, and I hope you're being safe and healthy. And I'll catch you on Tuesday on the F.A.C.E webinar. Remember, it's free, and there's a link to register in the description of this video. Make sure you click on that to register for our daily webinars. All right, thanks everybody. Have a great remainder of your weekend.